Hello class, this is Brian from financialtrainingschool.com and welcome to the first lesson of the 400 series. And this is GT401, Accuracy versus Profits. So we're finally doing the first lesson of the in-depth, higher level thinking of the general trading series. So when you meet a new trader, what do you ask them? There are normally two questions that people ask. What's your win ratio / accuracy? Or how much money profits do you make? Depending on which of these two questions crosses your mind first, it can determine what type of person you are, because it shows your mindsets, your goals, and your level of trading. Personally, I've stopped asking these questions because it's a private matter. How well you do in trading via accuracy or profits is your business, not mine. If you think about it, it's exactly the same as asking what a person's income is. Profits to a trader is the same as income to a normal individual. So it's kind of private. So depending on who you are, you may or may not ask this at all, but whatever. So throughout this lesson, I'll help guide your mindset towards the differences between accuracy and profits. So most traders ask about profits. It comes naturally because profits is the first thing you think about because it's the ultimate goal for most rational people. And rational is because we want to make money, not lose money. So unless you want to lose money, then that's kind of irrational. So this goal factors into their short-term mindset about the immediate future. That's why asking profits comes easy for inexperienced traders. Unlike accuracy, which precedes profits. Accuracies, if you think about it, must be obtained first, and then profits will follow. It's as simple as that. Yes, profits is the ultimate goal in the end, but to get there, you have to increase your accuracy first and get better. This might sound like a no-brainer, but when was the last time you asked somebody what their win ratio or accuracy was? E.g., what are the odds based on their track record that when they walk into the next trade that it'll turn into a profitable trade? Usually experienced traders only ask this question because knowing the accuracy, they can guess what the profits are instead of rudely asking personal questions. So we're going to start with accuracy first, since it seems fitting to start with square one, since accuracy dictates everything else that follows. And this is usually quoted as a ratio or a percentage, e.g. 70% accuracy or 80% win ratio, etc. And one thing to note, anybody in the world claiming 100% accuracy is full of shit. Even 90% is cutting it close. Unless you're a prodigy and you start off winning right from the beginning, chances are your newbie days are filled with losses. Everybody starts with losses. As I mentioned in I think the first video, GT401, I mentioned 99% of traders are losers. So, I mean, most people lose in the beginning. Eventually, through persistence and consistency and all that stuff, through experience, you get better and you eventually get a higher win ratio. But everybody starts off with a low win ratio because naturally we just lose because you're inexperienced. But throughout time, you get better and you get better and better later on. But remember this, nothing in life has 100% certainty. The only certainty in life is uncertainty itself. On the next slide, I'll examine two ways to improve your accuracy. So as noted previously, accuracy is a ratio, e.g. winning trades divided by total number of trades times 100% gives you your accuracy percentage. So if you examine the math, there are two ways to increase your accuracy percent. Either you increase the top number, aka the numerator, or you decrease the bottom number, aka the denominator. So the first way is to increase the number of winning trades. Even if your newbie days had losses, over time, like I mentioned before, if your winning trades far outweigh your losses, you'll eventually have a higher accuracy percentage. For example, let's say your first year had 200 losses. In order to get an 80% accuracy, you'd need 800 wins. So that you'll eventually have 800 wins divided by 1,000 total equals 80% accuracy. And this is normal. Everybody can think of this one, and most people try to do this. They have losses initially, but later on, they try to improve themselves, try to get more wins, and then eventually the accuracy averages out and they have a higher accuracy. So that's straightforward. The second one is the higher level thinking part. You decrease the total number of trades, and this is the key aspect of accurate trading, being selective while trading. Selective trading will inherently reduce the number of trades you make because you're aiming for higher probability trades that will hopefully yield profitable trades. Because why bother with low probability trades? The higher the probability of a trade, the less frequent it will occur. But if you master your strategy effectively, all you have to do is scale up your trades. And that's what most pros do, because they start their trading day off and then they open the charts and then they're like, okay, if I don't see a certain trade, then I'm not going to take it. Why would you take a 50-50 trade? Because 50-50 it could lose or win, versus taking, say, a 90% trade. That means you walk into it, 90% is going to win. That's why you take it. Or 100% or whatever. That's for the actual trade, not the ratio. Okay, so that 100% that I just mentioned is like the very certain trade. But that doesn't happen, like I mentioned. Nothing is 100%. So maybe 99.9% that you know that, okay, earnings just came out and it's good. That means most likely the stock's going to go up today. So that's like 99%. I don't think there's any example in life where earnings are good but the stock goes down. Very few of them, unless it's like a bankruptcy stock, in which case they're just going to use it as a catalyst to make the stock drop. But whatever, that's another discussion. So the next thing we're going to move on to is profits, and that's where the scalability comes in. So for profits, there are several aspects of profits to touch on. The first is your financial situation, and this is referencing back to the GT401 series. You're always trading with money that you can afford to lose. Recall the idea of weightless money from, I think, Money Management or the Business Mindset. I don't remember which video it was. But basically, this is spare money that you put aside after paying for mortgage, bills, etc. So this is like beer money or, I don't know, vacation money or something that's spare. Like, you don't need these. This is wants, right? This is not necessity money. So keeping the idea of weightless money in mind, if and when you talk about profits with other people, just like when you compare incomes, everybody has their own unique situation. Who cares if your friend is making X amount while you're making less? Because he can afford to risk more than you. Don't let that pressure get to you, because everybody has their own financial situation. Everybody knows what they can risk. Everybody knows what the pace of trading is, their accuracy, their strategy, how long they've been trading, experience, etc., etc. Everybody's different. This is what I mentioned in GT401 conformity. You don't have to conform to other people. It's not their money you're trading with, it's your money that you're trading with. So just do whatever that you're comfortable with. So just keep that in mind. If somebody makes $10 million today or another person makes $10,000 a day, given whatever their financial situation is, that's what they're doing based on their own criteria. So that's the first thing to mention. And the whole point of that is just don't let pressure get to you. Second thing to note is profits should be discussed as a percentage. It doesn't matter what instrument you're trading. It's a common notion to speak of profits in terms of percentages. Why? Because everybody has different account size, just like I mentioned. Everybody has their own financial situation. So for example, two people tell you they made $1,000 today, but one of them has $1,000 starting account size. So he doubled his account today, e.g. a 100% gain. While the other one has a $10,000 starting account size. So he only made 10% profits today. You see the difference? So depending on who you're talking to, just always say percentages, because if you made $100, that could be 10%, 1%, 1,000%. I don't know. It depends on your account. So just make sure that it's realistic. That's why you talk percentages. Not many people, except for inexperienced traders, talk about the actual nominal value. They talk about the number. Most people, e.g. the experienced traders, talk in terms of percentages. They always say, I made 2% this year, or I made 10% this year, or I made 20% this month, or whatever the case may be. And lastly, for the third aspect of profits, I'm not going to have a slide on it. I'm going to actually illustrate this in Paint. So let's just switch over to that now. So here we go. Scalability is the third aspect of profits. And this is basically the culmination of this whole lesson. Because first you have accuracy, which you master first. And then you have profits, understanding all the aspects of it. And then scalability is the last thing. Because once you improve your accuracy, as I mentioned in the beginning, and once you master your strategy, all you have to do is scale your trades, and then you make more money that way. So before I start on the example, I just want to say that I've thought of different ways to illustrate this example, but there's no other logical way to do this. So I apologize if anybody's offended. But basically what we're going to do here is we're going to do a comparison of guns. Previously, I think in one of the other videos, I used hunting as an example, and most people understood that. And most people have a common knowledge of guns. So we're going to use 4 types of guns here, and imagine that we are at a shooting range or for target practice or whatever. So let's just start off by drawing a target, just so that everybody knows what we're talking about. So a circle, then another circle, and we'll do another circle in between there. And let's just color code the red for the target. So the red is what we want to hit. And then this kind of looks like a dartboard, right? So, and then you have the other outer circles. So the red is the target. And basically, how I'm going to walk through this example is basically the stages of a new trader to an experienced trader. And we're going to just basically summarize what we've done in this lesson. So when you go to the shooting range, so just imagine yourself walking into this place, and you're going to have choices of guns. And think of yourself as a trader. When you first started out trading, you start small. So let's imagine the first thing that the person picks up, the first gun, is going to be a pistol. So obviously I'm not going to draw this to scale, but we're just going to imagine that this is a pistol. Okay, so a pistol is the smallest gun in the traditional gun, right? The first thing that you have. With a pistol, you can shoot one bullet at a time, and your accuracy isn't that great because you're just holding it in your hand. You don't have a scope. You don't have anything like that. So a pistol is what most traders start off with. They start small. They make one trade at a time. Eventually, they get better or worse or whatever, and then they improve. But most people, they switch their tactics or switch their strategies, and they move on to a different gun. So let's say this person, so let's say they shoot a bullet, right? And a bullet comes out, and let's say it misses. And it goes, and then it hits the blue part. So it misses. So they're like, okay, how can I improve this? How can I get closer to the red spot? And the usual thing that most traders do, and this is kind of like going on tilt, is instead of making one trade, they make multiple trades, and they try to spread out the trades. And because they think, if I make one trade and I make mistakes, what if I made 10 trades? Maybe the possibility of one of those trades might end up being a winning trade, and I might cover the profits for the rest of them, or whatever the case may be. So basically the next step is they switch to a machine gun. And I have no idea how I'm going to draw this. So a machine gun usually looks like this, a little thing at the front, and I guess you hold it and something like that. I don't know. Let's just say it looks like this. So you have a handle in the front, and you have a trigger there, and something like that, and then you have a scope, a tiny one, something like that, so that you can hopefully shoot out multiple bullets at the same time. Something like that. So that hopefully your different trajectories land you somewhere near the red dot. So maybe one of them gets to the blue plot, and then one of them gets to the green one, and then maybe one of them hopefully gets you to the red dot. So you get 1 out of 3, and that's usually what the next step is. But then that's not good enough, because then people are like, okay, I make multiple trades, and maybe one of them will hit, but what if I want that one trade to get the profits to cover the losses for the other one? So the next step people go is they increase the trade size, and this is a problem, because depending on where the target hits, you might either win a lot of money or you might win a very little money. So this part is when they switch to a shotgun, and I really don't know how to draw a shotgun. So let's say we have this, and then the thing that you load the shotgun with, and then something like that, and then trigger, something like that, and this is a bigger bullet, so that hopefully if you hit a target, and if it's on target, then it will make a bigger impact than all these smaller bullets up here. So let's say this is a big arrow, and let's say it hits the green and part of the red. So you're somewhat okay, but you're not entirely okay. But what if it hit the blue, for example? Then you would be totally off. So that's the problem when people increase the magnitude of their trade. They try to increase the trade size, but what if it ends up losing? Then you're just going to wipe out everything. That's why in I think GT401 or 210 for money management should always be consistent, and then over time your percentage per trade will grow as your account grows, as your consistency keeps growing. So over time you'll get there, but some people just want to skip and they just increase the trade initially, and then that wipes them out early on, and then they can't continue onwards later on. So that's the third stage. The last stage, which is where people should be starting off from the beginning, or that's where the goal should be in the beginning, is to increase their accuracy. And this is the problem, because this is the last stage that people go to, but it shouldn't actually be the first stage that people start at. But for those of you that know guns, a sniper isn't exactly newbie friendly, because you should have some background of guns before you use a sniper. So a sniper, I guess I'm just gonna draw this kind of like the shotgun. So we're gonna have the barrel, and then this is gonna be the stand at the front, and then the handle or something, whatever, something like that. And then you're gonna have the scope on the top, something like that. So that's the sniper. And this is, I guess, the bullet is slimmer than the shotgun, but it's longer, and this is more accurate, so that you can actually aim. So this is going to be bullseye right on the red, and this is what we want. And this is accuracy, and this is the last stage that people eventually get to after going through all the multiple stages of trading. They start off with a pistol, one trade at a time, then they go multiple trades with a machine gun, and then a magnified trade with a shotgun. But eventually, all they really care about is accuracy, and that's portrayed by the sniper. And this is the stages 1, 2, 3, 4 of a traditional trader. But if you know what you're doing, you should go from 1, skip to 4, and then go back to 3. Because you start off, you make some mistakes, and then you increase your accuracy with a sniper, and then once you have your accuracy up, you scale that up to a shotgun, and you maximize your profits. And that's the stages you should get at. And that's the whole moral of this lesson. Improve your accuracy first. Doesn't matter if you make mistakes early on, doesn't matter. Eventually, through time, consistency, effort, experience, all that stuff, you're going to increase your accuracy. Once you know for sure that you have high probability trades, your accuracy is good, you know that when you enter the next trade, high probability that you're selective in nature, you're going to end up with a profitable trade. Knowing that it's a profitable trade, you're going to increase more money on that trade, knowing that it's going to win, and eventually you're just going to profit more. So that's it for this lesson. Hope you guys get the message and you enjoyed the lesson, and I will see you guys next time.